Hello everyone and welcome back to FIC KMC's YouTube channel. I am Harshveer and today we're breaking down one of the most interesting IPOs open for subscription, Om Power Transmission Limited. Is this a hidden gem in India's power sector boom or a risky bet? Stick around and by the end of this video you'll have a clear answer. Let's get into it. Before we talk about the company, let's understand the sector it operates in. Power transmission infra. India is going through a massive energy transformation. The government has set ambitious renewable energy targets, and every new solar farm or wind park needs transmission infra to connect to the national grid. That's where companies like Om Power Transmission come in. The Indian power generation and transmission market was valued at $125 billion in financial year 24, and analysts expect it to grow to $280 billion by financial year 30. That's a CAGR of roughly 14.4%. So the runway here is long and the opportunity is real. Government spending through schemes like the revamped distribution sector scheme and the national infrastructure pipeline are pumping money into grid modernization. This sector has strong tailwinds and Ohm Power is right in the middle of it. Ohm Power Transmission Limited was incorporated in June 2011, so it brings over 14 years of experience to the table. But what does it actually do? It is an EPC company, engineering, procurement, and construction. In simple terms, the government or utility company announces a project. Ohm Power bids for it and wins the contract, and then designs, builds, and even maintains the infrastructure end to end. Specifically, they work on high voltage and extra high voltage projects. They're certified under ISO 9001 2015 and ISO 4501 45001 2018 and 14001 2015. Geographically, they started in Gujarat and have now expanded into Rajasthan, Punjab, and union territories like Dadra and Nagar Haveli and Daman and Diu. As of December 2015, they operate and maintain 124 substations and have deployed over 500 circuit kilometers of transmission lines and underground cable. That's a solid execution track record. Now, let's talk about the IPO itself. This is a book building IPO, meaning the price is discovered within a band and you bid at a price between the floor and the cap. The total issue size is for 85 lakh 75,000 shares, aggregating up to 150 crores. And out of this, the fresh issue is 75 lakh 75,000 shares, and the offer for sale is 10 lakh shares. So fresh issue means that the company is issuing new shares, and offer for sale means existing shareholders are selling their stake. That money doesn't go to the company. Here, 88% is fresh issue, which is a positive sign. Most of the money stays in the company. The face value remains at 10 rupees per share and the lot size is at 85 shares per lot. So, how is market receiving this IPO? The shares are reserved across three investor categories. QIB, that is qualified institutional buyers. They are mutual funds, banks, insurance companies, provident funds, pension funds, VC funds, and etc. For the reservation, 50% of the total issue is reserved for the qualified institutional buyers. NII is non-institutional investors, and the reservation is 35%. And for the retail investors, I'm so sorry, the retail investors reservation is 35%, and for the NIIs, it is 15%. As of today, the subscription stands at about 0.7x. Category wise, it is 1.18x for qualified institutional buyers, For retail, it is at 0.58x, and for NI or HNI, it is 0.38x. Honestly, subscription so far is muted, which reflects general caution in the market rather than a fundamental problem with the company. Now, for the important dates, the IPO opens on 9th of April. It is closed on 13th of April. The allotment would be by the 15th. The refund would be by the 16th. The IPO would be listed on the 17th. The book running manager is B9 Capital Advisors and the registrar is MUFG In Time India Private Limited. Now let's talk about the GMP, that is the grey market premium. For those who don't know, the grey market is an unofficial, unregulated market where IPO shares are traded before they are officially listed. GMP gives you a rough sense of investor sentiment. Om Power's GMP peaked at rupees 7 on April 9th, the day the IPO opened. As of today, it has come down to around 3 rupees to 3.5 rupees over the issue of rupees 175. That means the grey market currently expects a listing around rupees 178 to rupees 178.5, implying a gain of roughly 2%. That's quite modest. Clearly, the market isn't pricing in a big listing pop. GMP, though, is unofficial, speculative, and can change overnight. Don't make your investment decision based on this number alone. Now, talking about the financials, the revenue figure has increased at an impressive 52% CAGR from financial year 23 to financial year 25, the numbers being 120 crores at financial year 23 to 279 crores at financial year 25. And as for the profit after tax, in 2023 it was approximately 6.23, and at the end of March 31st March it was 22.08. So the PAT grew at a CAGR of 88%. Profits nearly tripled in 2 years. But note, the jump from financial year 2024 to 2025 is very sharp, and that raises a question: is this growth sustainable? The EBITDA margin, though not mentioned here, improved from approximately 10% in financial year 23 to 12.66% in, in financial year 25. The PAT margin is approximately 8%, which is decent for an EPC company. Apart from that, the debt to equity ratio has increased a little bit, but the proceeds would be used to pay off previous debt. Now, talking about the objectives of the issue, breakdown for that. So, 11.21 crores would be used for funding the capex of the company. The prepayment or repayment of outstanding borrowings would use approximately 25 crores, and for funding long-term working capital requirement of the company, 55 crore rupees would be used. Now, for the final verdict for this IPO. For listing gains, this one doesn't look exciting. With a GMP of just rupees 3 and a weak subscription, don't expect fireworks on listing day. For long-term investors, this is a more interesting story. India's power infrastructure push is a genuine multi-year theme. The company has a strong order book and the valuation is not stretched. If the client concentration risk reduces over the next 2-3 years, this could be a solid compounder. Our recommendation neutral to subscribe for long term. Only if you have a 2 to 3 year horizon and are comfortable with small cap risk. Skip if you're looking for quick listing gains. And as always, do your own research. Consult your financial advisor and never invest more than you can afford to lose. Thank you.